What's going on, everyone? This is Jordan with Conquer Trading and Investing, getting ready here for our live session here in New York. How's it going, everyone? Hope you're well. Hope you're well and doing great. Had a really fun session yesterday. Looking forward to another one today. Good to see you all here. Looking at here a chart. First of all, before we get any further, we're just going to say on the calendar, we do have the G7 meeting all day. So expecting some headlines tomorrow. The rest of the calendar, I'm not really concerned with, although today's trade balance definitely helped spike the U.S. futures overnight out of China better than expected. I think what we're going to see as we enter earnings seasons right now is companies, as far as the legal limit allows, go ahead and just show really bad numbers so that the possibility remains that, and the guidance will be absolutely horrific, so that they have every reason to be able to do it during this crisis, and that going forward, they have an opportunity to come in line or beat numbers. IMF is saying that they do not believe the global economy, will be able to shake the great lockup by 2021. I have to say that that's what I see. That's what I agree with. And here you can see that U.S. imports, export prices have plummeted. This is really deflationary. This is something that's going to help put a bid under the U.S. dollar. And speaking of the U.S. dollar, let's look at what it's doing this morning. We could see that the dollar is definitely off slightly this morning. You could see that being priced into the euro US dollar. The DXY is down almost 0.5%. Here you look at the euro US dollar, and you can see that Y off its highs slightly into this area of resistance. Go ahead and extend that little blue bubble over here. It's still been bid ever since it failed a breakout of this trend line over here. Let's see if this makes more sense at this point to clean this up. All right. And you know, so I'm moving this trend line now only because of this is what the price action is showing me. Yesterday, this was a valid attempt, right? When this trend line broke, but you got to adapt to what's happening. And, you know, the market is now holding this line like this. So that's what I'm going to go ahead and recalculate. It's not like the attempt yesterday when we broke down over here was a valid attempt. I could see now, though, afterwards that, well, we need to go ahead and readjust this line, as well as the whole reason yesterday we were using a break of the low was for that confirmation to get into that break. So I still like the trade, and I'm still waiting. And if you watch the video uploaded to the channel on the US dollar yesterday afternoon, it did talk about whether or not I'm looking for a possible dollar weakness because of the monetary expansion, or actually strength because of things like we're seeing like this deflation coming in right now, the dollar shortages and whatnot. Why I do think this is a good area to lean in short to the euro US dollar. For me personally, not here yet. It will either be up here if we get a test of this resistance up here and this little trend line. There we go. Up here, or a break downwards, I would prefer, right? Or even below this support, right? I have no problem being late to the trade as long as I am more certain in the trade. Not looking to pick tops. I'm looking to ride as momentum takes over. Simon, Sheriff Blair, good to see you all here this morning. What else do we have? Bitcoin, we'll get into early this morning. Bitcoin is kind of maintaining just neutral and maintaining. You see the equity markets are up over the last 12 hours. Bitcoin is slightly negative. What I'm seeing is, you know, over here, sorry, this line's got to go. After we did not, I'm sorry, let me pull back here. Just give you a better look at what's going on because it's kind of important. Bitcoin is crucially important. You could see as we did not make it above this trend line resistance over here, this really important line to break back above, because once we break back above it, we're back inside the triangle. It's really, really, really bullish at that point, setting up for a break above and to begin the bull market phase. We're still below it though. And if we get back below 6,500, at that point, we could see further lows. I imagine to 56 is where I'm looking at. That's still on the table, right? And it's still fragile. It's still fragile until we get back above this trend line resistance over here. At that point, things get a little more comfortable. Now, this was pretty good to see that price came down and held the 6,500, bounced off it, and you can see that it's quite neutral since. Why it does definitely have potential to get back up into this area of supply over here, and even during this session, the only thing to watch out for right now is below 6,500. At that point, you probably need to put on a hedge. We're probably trading down to 5,600. Or if we get back above this trend line resistance, at that point, things look pretty comfortable. Right now, more than anything, price is just pretty neutral. Gold is up again, another percent, trading at 7-year highs, $1,730. Beautiful to see. Definitely a huge supporter of sound money. Love gold. And just a shout out to Anita over here, who definitely saw this break of this trend line. For her, it was definitely a head and shoulders over here, left shoulder, right shoulder, head, and beautiful, beautiful, beautiful entry. Here was the second place to get long the trade. I'm on the sidelines here and definitely rooting for gold, not chasing anything though. We'll see what happens. Silver joining the party today. Like to see that as well. So silver actually looks like, you can see over here that it looks like it's ready to break above this resistance over here. And if it does, I think we're going to see definitely 1660 and or 1740 pretty quickly. So precious metals acting exactly as they should, and big fan of that all around. Dollar, as we said, so far is a little bit weaker today. Let's get a look at the dollar index over here. Since we lost this trend line to the downside, we've come in. All right, I expected a little bit lower, a test of the support at 98.85 or 98.90 to come into play. We've reached as far as 98.95. All right. So what else is happening? If we lose this support over here, yeah, for sure, it makes more sense. It would be completely reasonable to trade down a little further to 98.30. So right now we have that definitely that little bit of dollar weakness being priced in, but there's definitely not momentum there, right? You could all see that it's a light move. Maybe the momentum will pick up later in this session, one way or the other, but not much going on there. Not much going on at all. What's going on? Good to see you all. Let's see. US dollar, Japanese yen. Yen definitely remaining strong. It's coming into this area of support. You can see that pretty clearly over here. All right, you can see this pretty easily over here. So that's something to lean off. You could see that if I put my mouse, and you can see the horizontal line a little lower connecting this area of support over here and support over here, that this is more of a blue box, that we have further support down below us as well. So it's an area to watch how price reacts over here. Swiss franc, strongest currency of the session. So that's interesting. That's an indication that perhaps we're seeing some risk come back into the market. Japanese yen also bid, US dollar lagging. What happens if we take out the support over here? If we take out the support over here, I think that we'd definitely see a little bit of an extended sell-off and further dollar weakness, and we'd be looking much lower levels. I have it down at 106.93. No, I'm sorry. That's 105. That's 105.78, right? So that's a big difference. So far, though, I have not seen anything worthy of setups. While yesterday the markets were alive, just kind of waiting to get a feel in here. Let's look at the Australian dollar, Swiss franc. As we're seeing the Swiss franc a little bit, you can see it off of the resistance over here, and that's beautiful. That's beautiful. So that's an indication that we possibly will be holding this strong resistance over here and turning down. I still feel like the market is right now in a little bit of a holding pattern. I'm not seeing that volatility is down, right? When you see something though at an inflection point, that's where you could take advantage. But I'm still seeing that the market is not, it's a little bit undecided. This over here actually is a beautiful place for an entry over here on the Australian dollar, Swiss franc. Again, reason being is because you have your stop over here at the high, actually above this resistance going into the first area of support. That's a pretty good risk to reward. I would say it's close to 2-to-1, and that's just into the first area of support. All right, so that's a good trade setup happening right here on the Australian dollar, Swiss franc. I assume similar is happening over on the New Zealand dollar, Swiss franc. Do want to take a look at it with you. Do want to go over, just get a real good feel for multiple currencies crosses this morning before we get into looking across the board. And you can see that this actually looks a little bit more bearish over here. You can see rejected here hard at the resistance and taking out this area of support also. So that looks really good to the downside over here on the New Zealand dollar, Swiss franc. Both of those trades finally appearing that they might be ready to materialize. I have to say, I could see a good reason why why these risk off pairs would come back into the market right now. But technically, they're doing it finally at some strong resistance. This is the opportunity to lean in, and then we'll see if the narrative and or news cycle soon follows. Let's look at the pound Swiss franc as well. All right, you can see this didn't get as high into the resistance as the New Zealand dollar, Australian dollar, Swiss franc did. Nevertheless, being rejected over here at this area of resistance and resuming down. I think the other two pairs are definitely more attractive than the British pound, and that's where I would focus my resources and attention. U.S. dollar, Canadian dollar. I didn't check out oil yet yesterday. It appears to me that this this did break down over here, this level, right? And it's now coming up and testing it. All right. So this brings a nice opportunity right over here. Why? For two reasons, right? If price is now, after the breakdown, coming up, retesting this broken support as resistance, if it does peel off the other side, right, that gives the indication that this is now, the support is now turned resistance, and we could see some further appreciation here on the Canadian dollar against the US dollar. At the same time, if this is a false break, how would it be a false break? A false break would mean it broke down below the support and then comes back above it. And then once you clear this trend line to the upside, that will be a signal to get long. That would actually provide some fuel over here to the fire. So that could go either ways. US dollar, Canadian dollar, definitely in play this morning. Steve, also, so I believe it was Dinkar who mentioned on the Australian dollar, US dollar 15-minute. Let's look at it right now. All right. So putting my mouse over here to see where that level of resistance up is a little bit higher. Let me draw that in. That's pretty important. Close to it. We came right into it, really. All right. So next, let me check out the 15-minute. I think it's possible head and shoulders right here. Let me draw it in for you. I'll start with the neckline. This is the left shoulder, head, right shoulder. I think this is exactly what Dinkar was looking at. And I see it right there. So that's interesting to look at, a pattern to look at over there. Why? Because you're trading up into this area of resistance, a head and shoulders on a small time frame could lead to a trigger to get into that trade on the downside. Steve, let me see what you're looking at. 6.4. That's right where price is right now. Let me zoom in a little bit further to see what you're seeing, Steve. All right. So I like this. I like Dinkar's possible head and shoulder pattern developing over here. If you're looking to trade this trade off of the resistance over here, I think this is a pretty solid pattern to look for. Whether or not you're just looking at this, see that bit of that neckline, we'll call it. That's the same thing as looking at this area of resistance. Trade back below that. That might be a really solid entry on the higher time frame. Trading off of that resistance strong resistance over here. Good place to lean in. So I do like that a lot. Seems to be actually, now that we're digging in a little further, there seems to be multiple possibilities here. This trading session. It's Tuesday. Got the G20 meeting. US equities are definitely bid. At the same time, let's check out the New Zealand dollar, US dollar, and let's see which of those two pairs is offering the better opportunity. See that the New Zealand dollar is definitely lagging today. Thanks for pointing that out, Carl. That's a good look. All right, here we go. We got the New Zealand dollar, US dollar. And so it's hard to get it. So this is support. Although the New Zealand dollar is definitely weaker today than the Australian dollar, against the US dollar here, I almost feel like the Australian dollar offers that little bit better of an opportunity if you're able to get that signal over here than on the New Zealand dollar. However, if the New Zealand dollar is able to go ahead and take out this support to the downside, that's a pretty clear signal as well. So both those pairs are definitely live. You're seeing them play out a little bit stronger on the Swiss franc. So I think that the thing to do next is look at the New Zealand dollar, Japanese yen, and the Australian dollar, Japanese yen, and see what's happening over there. You can see obviously here, this looks very strong signal to the downside. And, as the Australian dollar, New Zealand dollar are into these areas of resistance, whether it's first the Swiss franc, Japanese yen, and or US dollar, they all look like it's time to establish the positions been really waiting for a long time. The risk to reward is more than there because they're into that strong resistance. If they break it, you're wrong, but the potential here is just really, really pretty big. So this is kind of where I feel I focus most of my attention right now. What about the Australian dollar, Japanese yen? Again, all of them at that big level of support. Are we going to start seeing risk come into the market right now? A risk off coming into the market right now? Well, this is the place to lean into and watch and see. We do have earnings seasons coming up right now. We are coming up to the precarious place of how do you open up the economy. Everyone seems to be pretty, I would say, overly optimistic. I'm not in that camp yet. I need to be really, I'm a trend follower, which means the trend has to be in place before I could get involved into it. So I'm undecided here. Let's take a look at the S&P for a moment. I'll load that up, and why we do. So just to review a little bit, the opportunity that I see this morning is definitely on the Australian dollar, New Zealand dollar pairs, whether it's the Swiss franc, Japanese yen, and then the US dollar, kind of in that order. I also see the US dollar, Canadian dollar in a really interesting area because it offers opportunity here if this broken support holds as resistance and price is rejected off of it, you can see it coming up right into that broken support, holding as resistance so far. If it resumes down to the downside, then I'm looking at probably some more appreciation against the Canadian dollar, and the possibility for further dollar weakness. Well, why I put it at kind of 50-50, could go either way. We're seeing WTI off pretty much a lot over here, almost 5%, back down to 2140. Are we going to test that low of 1950, 1960 and take it out? Could be. Now, again, the trade that I'm kind of also more so looking for actually would be a break above this trend line. If we got the fake down to the downside and then all of a sudden momentum take us back above this trend line, this is where that trade becomes really interesting to me. So lot going on in the market that's providing some ample opportunity. I see that the euro pretty strong against the Japanese yen today. Pound strong versus the Japanese yen today. The yen seems to be stronger versus everything else except the pound and the euro. All right, euro having a pretty good day versus the dollar. Let's check it out as we're getting rejected in this area of resistance over here. Again, for me, the play is not only a break of this trend line, and if we're close to it, then this support over here. At that point, things become clear, and that looks like an opportunity for me to get short. Aside from that, I'm not really so interested in it unless we get another, you're coming into local support right down over here, about 5 pips lower from here. If that holds and we get another look, as we get into this resistance line up here, this trend line resistance and this horizontal resistance at the top of this blue box, that would be an area that I would look to lean in to short and get ahead of the curve over there. But right now, on the sides, waiting. All right. So strong look today. Let's check out the Swiss franc, is strongest currency pair. Let's see what it's doing versus the US dollar. Let's see. Sticking out a big area of support. I'm going to start here on the daily. So this gets pretty precarious down here. If today we get a close below this area of support, that definitely opens up the possibility of much further gains here. The Swiss franc versus the US dollar. US dollar is in a pretty precarious place over here. It's at the turning point where near term it could start really turning, accelerating some of its weakness. I'm tracking things like, well, it's hard. I definitely have to say that the against the euro, it looks like that the euro is getting close to putting in its highs over here. Canadian dollar, it looks like the US dollar could reverse. I'm very unclear on the US dollar. I want to go where there's clarity. Where there's clarity seems to me against those risk off pairs: Australian dollar, New Zealand dollar, Swiss franc, Japanese yen. Little bit less versus the US dollar, but that's where the opportunity seems to be today. Bitcoin finally turning green on the day, really trying to take out 69. Again, it would not be surprised to see Bitcoin challenge 7,300 even today. That would be pretty bullish. Gold remains very, very bullish. We like that a lot. Let's check out the Euro Australian dollar right now. So the Australian dollar is at a point where we see it versus heavy, strong resistance on multiple pairs that we're looking to kind of lean in over there. At the same time, you could see that it's coming down also into heavy area of support. Let me really readjust this line over here, which is above the top of those peaks over there. And I'm going to put it down over here, right? put it down over there. So you could see that today on the daily, we could get a close back above the support. It would signal that this is holding. This sincerely might be a place to lean in versus the euro versus the Australian dollar. You know, why I'm not sure about it. You're into heavy support after retracing pretty far off this breakout. It does look like it's the possibility of a turning point on the Australian dollar, which I think is seen over the last 7 sessions, all up days. Let's check that out. Let me put on the daily. This is versus the US dollar, and it's seen 1, 2, 3, 4, 5, 6. This is the 7th update here in a row for the Australian dollar, US dollar. So, you know, it seems to me to be really, really extended off the lows into this strong area of resistance. It looks to me this is the place to attack the Australian dollar, and the timing is pretty golden today. So that's something that I am interested in across the board, even though I'm not a fan of the euro. And so I'm talking this out amongst myself. Kind of, you know, looks really good, almost taking like a basket play versus the New Zealand dollar, Australian dollar. You know, versus a multitude of multiple currencies right now. Thanks, Jim. We had the best ever. Really do appreciate that. Hope you did. Hope you and your family did as well. All right. So I'm really, obviously you know, it's been a long time that I've been a fan of the being short the Australian dollar, and here it is right now. Today is definitely that day. And let me just check out the Australian dollar, New Zealand dollar, because we know that the New Zealand dollar is definitely weaker today versus everything. And you can see us coming into this big area of resistance. So this opens up the door either way, right? Here's a place if this is rejected. I do definitely could see, even though I don't like playing weakness versus weakness, the time to get short over here. And again, if we get above this one over here today, or tomorrow, excuse me, that's the first time since December that will be above 0.10541, and that opens up the door for some further gains over there. So New Zealand dollar is definitely much weaker, as we've seen, you know, versus the Swiss franc, versus the Japanese yen, versus the US dollar than the Australian dollar. But the Australian dollar is turning in that big area of resistance. You know, if you take enough of these opportunities, if these are the opportunities you take, there's no doubt you're going to be profitable, right? What I mean by opportunities, in a downtrend, you know, selling off of that resistance, in an uptrend, buying off of that strong support. Those are the opportunities. I'm going to keep focus on this one over here. I'm not convinced that the dollar won't turn today. And if you get the signal over here, this looks like a place definitely to attack. A lot going on today. A lot going on. A lot for me to review and kind of narrow it down. Yeah, Daniel, let's definitely look. Let's take a look at the pound, Japanese yen. I see the pound, why relatively strong today, versus, hold on, but still very neutral, right? Here's a look at a daily. Even drop down to the 8-hour. Very neutral. You could see it's just been hugging sideways over here, which obviously means that it's opening up for a big move sooner than later. I don't know how much weight I would give this little trend line. Let's even keep drilling down further over here. I mean, the clearest and easiest thing to do over here is wait for a drop down below here. To look to attack to the downside over there. If we lose that, we start making lower lows, because while the pound is holding up relative to other things, you know, attack weakness for strength. Today, the New Zealand dollar, Australian dollar are showing the weakness. Those are the ones that are finally pulled back into really strong resistance. It's the place to attack them. They've had 7-8 days up in a row. But the British pound over here, if it starts breaking below this over here, it could start rolling over pretty quick. And then it has 130.52 as the next area of support. That's a pretty decent trade. There's a lot of room in there. So as far as the upside, we'll look at that right now in a second and see if there's any possibility. Do have this pretty heavy, strong resistance right above. So I do not like this trade at all, the upside over here. Now, granted, if you're very short time minded, there's still 130 pips over there to the upside. So, you know, I don't like it. This is pretty strong, local heavy resistance right above its head. So I just don't like the risk reward over here on this trade at all. I think you're better off going where there's opportunity, right? And there's no opportunity here. We're in a tight range, right? Since the 9th for the last 5 days. 5 days. What am I looking at? This is the 9th. Yeah, the 9th through the 15th. So last 5 calendar days at least. The last 3 days we've been in this tight range, and wait for a break. I like it if it breaks to the downside as a possible opportunity, because you're into this area of resistance. You can see that possibly rolling over here, and then you could have a nice risk reward coming into this area of support, and it is support over here, and I would look for that to hold at first. If I got into that trade, I would be taking definitely a large piece off over there, and then maybe opening up the possibility for further move to the downside. But I don't see the opportunity there. Yep. There it is, Jim. Just wait for that confirmation first. It does look like it is appearing to roll over there. Just see some further opportunity elsewhere. Want to check in on the US dollar. So the US dollar, Canadian dollar, I'm looking for that big reversal. Again, also on the euro US dollar, I'm waiting for a little bit further of confirmation as well. 2 areas that I'm looking for here. If this coming down into local support in just a little bit, right? Still got about 4 pips to go to the downside. If that holds and we come back up over here, this is definitely a place that I would be interested in looking for a rejection, and then looking to get short up here. Neutral right now, 100%. And not only a break of this trend line, but a break of this support would really, that's the place that we're probably seeing a turn, and to get short over there. Now, if we break this trend line up further, giving much more room between the support and the trend line, then a break of that trend line might be the area. But I'm looking at this as nothing more than hold on, I need to just clean up my work a little bit, and let me clone this. Yep, so it's not there. This is definitely, in my view, a bearish rising wedge right now. That's definitely a bearish continuation pattern. You can see the trend is definitely down, and a break of this, I think, opens up the door for my entry, and then hopefully we see a test of the lows down here, which ultimately is what I'm looking for, and for that to break. Now, that's very forward thinking. I'm not trying to get that far ahead. Right now, I'm just watching this pattern develop over here, this bearish rising wedge, and looking to see how it plays out. Australian dollar, Canadian dollar. Let's check it out. Let me start here on the daily time frame to see what's going on. First of all, with this pair, this is also now trading into some heavy resistance over here. You could see what I like over here is, you can see also this really bearish, I'll draw it yellow, rising wedge pattern. So trading up into resistance over here. I can't say I'm a fan of the Canadian dollar right now. It just seems to me that the Australian dollar has really, after putting up severe, heavy bleeding, loss, gaping wound type losses, has retraced back into that area of the breakdown across the board. And that's the area to look, to attack here versus the Canadian dollar. But I don't like either one of these pairs, Australian dollar or Canadian dollar. And because of that, I just rather put my resources, strength versus weakness. At this point, though, I would be definitely looking for a possible reversal as we're up towards this resistance over here. Let's see if we can dig down even a little bit further and get a little bit more clarity. Oh, I didn't mean to add an alert there. I didn't mean to add an alert. A breakdown of this over here, of this trend line over here, that does open up, definitely a short-term trade over here. And it would be very nice to see perhaps, a move down further into that support. It's a good trade, or it's a trade. I'm just not a fan of the Canadian dollar here, especially with oil, WTI, under pressure right now. That must have, I have no idea what the price of Canadian crude is, but I imagine it's pretty low right now. Yeah, it's that patience that plays off. It's really that patience that let's escape it. I'm sorry, I didn't see that. Let's check it out. It's definitely patience that pays off, and it's definitely that early action that if you try to be preemptive, that gets you hurt. Starting here, Gabe, I'll be looking first at the 8-hour time frame. It's pretty volatile over the last 8-hour candle over here. Let's see. Let me look at the 4-hour. Not much of a read. I don't know where you're short from. I think that above this resistance over here, then you're wrong, right? That would be confirmation that you're definitely wrong. What happens if we bring it to the low of that move over there, kind of where we moved into? That might be even a little bit more of a better place to protect your profits. How much more of a downside could we see here? We're coming into this area of support over here, trying to look up a little bit where I put the low in. And if I go to the low of that bar, and then you look over to the left, you can see these touches on the bottom of these bars and over there. So it definitely traded down into an area of support and bounced up to the first area of local resistance, and it's kind of just now in a range. It's hard to say. I don't know. I think I would be more inclined if we test down below the bottom of that range again to take profits. But I don't have any type of clarity whatsoever. Lower lows yet. Bitcoin testing up to 69, now finally positive on the day. Let's see if we could get some kick into its step over here. Bitcoin's been pretty subdued of late. S&P, we've been open now 9 minutes, testing the highs of the day. They got the high of last week. And let's see if it could hold these gains over there and extend a little further. Ooh. Yeah. Gabe, I don't know that. That's the tough one, Gabe. I don't know that I love the entry, to be honest. Tesla traded back above 700. Let's check this out from, wow. I would say it's getting close into an area of resistance, though, as is the market. So it's not just Tesla. It's the overall, hold on. It's the overall market definitely trading into an area, also a pocket of resistance. We'll look at that in a second. And at the same time, Tesla is getting close to that pocket. So let's see how it reacts into this area over here. I can't imagine they're selling many cars right now. If we step back here, looking at the US indexes, S&P 500 is also into this area of resistance. You can see I have it marked over here, the heavy resistance at 28.78. If you look at Tesla, also up a little bit higher. So those two coinciding pretty well with each other. And then you have this trend line resistance we're coming down to over here. So interesting. You know, this also reminds me of, again, going back and looking at Bitcoin circa the all-time highs in late December 2017 and the period afterwards. If you look at that, let's see what happened. Not as much. All right. So you had the all-time high put in and then a really big move down, which we've seen on Tesla. We'll track that in 1 second. So the move down was almost 50%. And then a slight move up. Okay. We do see that on Tesla. So the move up was about 60%. Moved back down, didn't make a lower lows, came up high again into that area of resistance. And then from then on, it was a hard sell down. Now let's look at Tesla with that in mind. So we have the all-time high and then a move down of, so 450 would be about a 50% move like Bitcoin did, a little bit further down, and now we're all the way back up 350, about 60%. I mean, it's not the exact same pattern, but it is a similar structure. As Tesla comes into this blue box, if it's rejected, is Tesla selling any cars right now? Nevertheless, US markets taking out some resistance today, definitely bid over here. Market is loving these terrible earnings being put in. You know, it is what it is. You got to follow the momentum. I don't know what it is. You know, I don't know how many ventilators are needed, how that could help their sales. The markets are just doing, the markets are doing what they're doing, whether it makes sense or not. It doesn't really matter. You got to follow the market. So what is that doing? Those more importantly here, what is that doing over to our risk off pairs? As the markets are trading up, they seem to be trading at the lows of the day. Just trying to get a look around at the Swiss franc pairs as well. So I'm seeing that the US equity is trading up, but I'm not seeing FX buying into it. I'm seeing FX actually showing risk off. Interesting. I think gold is just beginning its bull market phase, which started definitely much lower in retrospect, 1200. But, I think gold's move is going to be coming over the next, 12 to 18 months is when we're going to see really the time for gold to shine. That's assuming that we don't see any type of liquidity crisis. And I do believe that the Fed has gone ahead and plugged that up, at least for the near term, that we shouldn't see any type of liquidity crisis. We're seeing QE. This is gold environment to shine. Is gold going to take out the bull market highs of 1900? Of course. Is it going to see much higher? Is it going to see high, 2,500 and or higher? I imagine so. Right now, as during the liquidity crisis, as gold smashed down from 1,700 all the way, this is about 15% down to 1460 over here. This 50% down move, that's a huge down move on gold. A lot of people did not want to step in down over here and buy gold because they didn't know if it was going to go down another 15% as it did during the 2008 crisis. Could that type of price action happen again? Of course, it doesn't mean it's an easy trade, but again, gold is something, to buy, hold, trade the FX cross pairs for profit. If you get opportunity for a technical setup on gold, absolutely take it. But right now, you did miss the train. You would just be chasing after it, which doesn't make any sense. But beautiful to watch. Really seeing the markets really solid gains. That's the best way to put it. G7 came out saying that they reaffirmed close coordination. Of course they do. All right. So where does that bring us for today? Where does that bring us, and where's the opportunity? Definitely, and I'm seeing in really those moves on the Australian dollar, New Zealand dollar. I think they're just getting started. I'm going to be looking. I'm going to be looking to position into those myself. I think they're just possibly getting started over here. Now, I do want to look at what's happening with other things such as the euro, US dollar. I want to just, as it's trading in that wedge, and I also want to check out the US dollar, Canadian dollar. And then also, if you guys are seeing anything that we want to get into now at this point of the session, definitely let me know. All right. Again, all I'm seeing is today, this is definitely bullish, the euro. I'm seeing this local bit of support down over here at 109.50. It's about 9 pips higher. What I'm looking for is for that to hold, us to come up into here. This is an area that I would look to position myself on a rejection. And depending on when we broke this trend line, if it was close to this support, I would wait for a breakdown of this support over here. Otherwise, a break over here. But this is right now in a bearish rising wedge, and I'm neutral on it, waiting for a place to be able to look and act. US dollar, Canadian dollar is being rejected off of this broken support. This is the triangle pattern. If you step back, you can see this big triangle pattern. You can see that it broke down and is now testing this area of resistance and coming down. Once this starts making lower lows, that's the confirmation that this held as resistance. And we could see some further downside over here. Now, at the same time, if these lows hold and we get back above this area of resistance and it's a false break, at that point, that might even be the time to attack. But a break above this trend line over here, then we could see the US dollar regaining its move versus the Canadian dollar. So Australian dollar, US dollar, Canadian dollar, and Euro US dollar, I'm waiting for things to materialize. And I am seeing position trades today setting up on the New Zealand dollar, Swiss franc, Australian dollar, Swiss franc, New Zealand dollar, Japanese yen, New Zealand dollar, Swiss franc. New Zealand dollar, Japanese yen, Australian dollar, Japanese yen. They have good risk rewards at this point. It's worth taking. Lesser so on the Australian dollar, US dollar. Although this pattern over here, that 15-minute that Dinkar pointed out, there's a little bit of a head and shoulders pattern over here. If this breaks down over here, that's a point. That's a place to attack, because on the bigger picture, we're trading into this area of resistance, right? So that looks good. Also, New Zealand dollar weaker than the Australian dollar today. You're seeing that versus the dollar, but it's got to break the support to open up. Really a confirmation. Otherwise, it's too soon. Break a back above, and we do start seeing a weaker dollar near term. It's completely feasible to see a weaker dollar, right? We're swing traders here. We're looking, 1, 3, 5 days in advance. If we break above this area of resistance to the upside, at that point, I think we could see further gains extended, because we have a ways to go until we get into some heavy resistance. Now, if you all are tracking anything else this morning, that's where my focus is, waiting patiently on the euro US dollar, bearish rising wedge, waiting to see on the US dollar, Canadian dollar, whether we get a bearish confirmation of a rejection of that broken support as resistance now to the downside, and or a fake out and then a break towards the upside. And then on those risk off pairs, we looked at Australian dollar, New Zealand dollar, Swiss franc, Japanese yen. And the US markets are bazooka today, really putting in some strong gains. Tesla rocketing up as SpaceX, you can see over here, really rocketing up. Who knows? Yeah, so I guess while we have a little bit of time here, let's look at what happened to gold during I mean, what happened to gold after the Fed started QE back in December of 2008? We could look at a weekly chart here and make it a little bit easier. But the reason I'm doing this is because the Fed just started QE right now. This was in right here in December of 2008. Zoom in with me. Right. This was the low of this is where Lehman declared bankruptcy in October of 2008. And then shortly thereafter was the low of gold. Okay. From there, now gold had been off 30% off its highs. Put the low in as Lehman declared bankruptcy. It was into December of 2008. Gold was off its lows. That Fed started QE. And then look what happened. The bull market on gold just began. And gold went from a price of roughly $800 to $1,900 in a period of, about 3 years. All right. So it had a, we'll call it a 2.5 times increase in price. Here we are over here. So far to date, this was the height of the crisis where gold was off 15%. And then Fed started QE. And since then, gold is now off. So if gold were to appreciate 2.5 times, you're looking at a price at about $4,000 gold. The amount of, the Fed is going to increase their balance sheet, expand their balance sheet much more than it did back in the 2008 crisis. So, would it be realistic to see gold surpass 4,000? I would say easily, right? So if you're into a gold trade over here, right, with the fundamental backdrop of the Fed just starting the biggest massive QE program it ever has, one that they will not be able to really walk away from, right? At this point, the Fed will not be able to stop their QE program. We're not going to have, 10 years later, them start quantitative tightening, which they did this past time. It took them 10 years to start the tightening. Do you think they're going to be able to tighten? I don't think so. That didn't go well the last time, and things were a lot better than they are today. So if you got into this, if you're into this gold trade over here, man, I don't know that I would be in a rush to give it up. Are we going to see a breakdown over here and a test all the way down of this last opportunity of the support down at 1640? I don't know who'd be that lucky. What about the breakout above 1700? Well, just come down a little bit further with me. There was the break above 1700, and over here we came back in and tested that resistance, right? So everything in the world is going rightfully so for gold. Let's check out the pound New Zealand dollar. Man, get on you, Jim. Crushing it today. For real. Really crushing it. Which alert went off over here? We had S&P is taking out 2830 now. Wow. What happens if we do break above this area of resistance up here and this trend line resistance? You know, are we going to see 3330 on the S&Ps? So what's interesting about the U.S. equity markets, and again, you know, I'm definitely remain in the camp that you know, a possible retest and or breaking of the lows could be in the cards. Now all the investment banks have said that the low has been put in. That might well be so for sure. So a weak dollar, if the dollar were to weaken because of all of this expansion of the money supply, that would equate to a much higher equity market, right? Basically, a long equities would be a short dollar play. At the same time, if the dollar is to strengthen, why that near term could have some headwinds for the U.S. equity markets. Longer term, you would see that we saw that tight correlation between the euro and the S&P during the crisis, and all that would mean if the U.S. dollar was strong, that foreign capital would have to come into the U.S. equity markets, and you would also then therefore see a stronger U.S. equity markets. So at the end of the day, because of this manipulation, this intervention in the equity markets, which you know, under normal circumstances, we should see an 80% correction during a depression on the equity markets, because of, you know, the Fed ready to step in and buy stocks, and they will buy stock. If we do come down and take out these lows, the Fed will be buying stocks, right? So there's almost like this artificial bottom now in the equity markets, and whereas what should happen probably won't happen. So something to keep in mind. Let's take a look at some news. More stimulus, more stimulus, more stimulus. Gold is really acting exactly as it should, and I'm waiting for Bitcoin to join that party. So I don't know, I think we're 29 days now into the halving. Bitcoin is going to be there soon. Bitcoin's monetary policy will be just as hard as gold's in less than 30 days. What else are we watching today, everybody? Ethereum looks like it's about to join the party over. Crypto looks like it's about to go pretty bullish, right? And you can see over here, Ethereum coming in, testing down this area of support, holding, resuming off of it, starts making higher highs than yesterday over here. This could really, you know, come up and test 176, the highs of the last move, the last swing high, pretty quickly and swiftly. So crypto looks like it's about to ignite. Almost same pattern here on EOS. You can see the local resistance price came up, pulled back down into it. It looks like it's holding. It looks like it has the possibility of today breaking out above yesterday's high and really setting that off. Same pattern across the board. So these things are so tightly correlated that it's just almost playing you know, Bitcoin and alts rather than each individual alt. XRP, same exact pattern. So so that's not such an easy question to answer, Martin. And hold on, I'm gonna get into it in 1 second. do you want to pull up what is relevant first? So, I mean, truly, it's not an easy question to answer. And the reason for that is because of the nature of the system, right? It's a US dollar debt-based system. What does that mean? That means that, basically going back to the fractional reserve nature of the system, for every dollar deposited into a bank, the bank then is able to lend out $9. What does that mean? That means that the debt just keeps growing exponentially, right? If at any time people need to recall their debts, there's not enough currency in circulation to cover all of the debt, which means that there's a lack of dollars. There's just a lack of dollars, and the world is short. If it's 12 or 14 trillion dollars right now. All right. So to service this debt, whether China's building the what's it called, the Belt and Road, all across, opening up all the way to Italy, trade routes, and all that debt was taken out not in yuan but in dollars. And it's not just China, it's countries all over the world have all of this dollar debt. Now they have to pay that back monthly, right? And with interest. So they need dollars to do that. How do they get dollars? They get dollars through trade, right? Mostly through oil. But the oil price is down all the way. WTI is trading at 21.79 right now. It was trading just, 4 months ago at $60. So that's a 1/3 reduction in the amount of dollars these countries are bringing in. So they have less dollars. So there's that demand for dollars. Right now we have this because of the global coronavirus slowdown, lockdown. We have a lack of trade going on, which means that people are not receiving dollars. So that there's even a more demand of dollars. What you saw happen during that liquidity crisis that we saw, just a few weeks ago, was that no one had dollars. They needed to sell off huge amounts of treasuries in order to get those dollars, until the Fed went ahead and instituted these direct swap lines to these other central banks so that they could get dollars. So, if you had euros, you could just automatically just, with the central bank, exchange those euros for dollars. Now, those swap lines need to be paid back. They're short-term loans. It's like buying your groceries on a credit card with high interest, right? You have to pay that back. So it's going to create more demand for dollars. So as this system is getting ready to implode, because at the end of the day, the dollar is going to crash. At the end of the day, the dollar is going to crash. It's what happens that's going to cause that crash of the dollar. Is it the Fed going ahead and with this huge expansion of the balance sheet, which to be honest, they're just getting started. They have a long way to go, right? Or is it going to be actually, the dynamics of this system, which is going to, equate to a much stronger dollar that's ultimately going to crash the system and then have that dollar sell off? I think it's the latter, right? I think it's the latter. If you look at that video, Martine, it does a really good job at explaining the current situation and both sides. And at the same time, if, going back to the thesis you're sharing is not the biggest stimulus in history going to weaken the dollar, at the same time, you'll see I'm looking out for that. I'm watching out for that. But the dollar would need to really, right now we're bullish. Look at this, right? This is bullish dollar, right? So at what level would I have to become, bearish on the dollar? Right now, I'm near term bearish on the dollar, right? Because we broke this trend line over here, right? Get back above this 98.78, and I'm really bullish the dollar, the resistance over here. Well, I think we have to pull back further, right? So right now, to prove myself, I got to get back above this trend line and or resistance, and then I'll be super bullish the dollar. Then we're going to test, up towards the highs, most likely. Right now, I'm waiting for a deeper pullback, maybe at 98.85 or 98.30. If those two levels hold, that's the time to reestablish long dollar positions. As far as, I think we got to take out these lows down here all the way at 94. I don't know where I would even think about getting bearish on the US dollar. I have Bitcoin and I have gold as my long, as my anti-dollar plays, because I think those are going to outperform the dollar. I think both of them are going to outperform the dollar. At the same time, I am long the dollar. I believe in being long the dollar versus almost everything else. So, kind of these, big, if the dollar were to weaken drastically, that's only going to benefit Bitcoin and gold even more, right? So by being long dollar, Bitcoin, gold, if the dollar is to weaken, you're going to make up for it on gold and Bitcoin. If the dollar is that wrecking ball versus everything else, gold and Bitcoin in this environment are still going to outperform the dollar, in my view. Definitely Bitcoin. Now, that's my working thesis. And, Martina, any insight opposed to that, I greatly welcome, because that's the most important thing for me is when I have an idea, when I have an investment thesis, is to poke as many holes as I can, because at the end of the day, I would love to be proven wrong intellectually rather than by the market, right? I'd rather be able to change my mind, change my view, and then be able to reposition myself accordingly in the markets rather than being proven wrong by the markets. I can't imagine being proven wrong by long Bitcoin and long gold in the markets over the next 18 months. So what else are we looking at today, traders? Seeing a little bit of a disconnect today in the fact that I'm seeing, U.S. equities are explosive. Gold and Bitcoin bid, and WTI is under pressure. and it looks like it's gonna, it looks like it's headed towards taking out the lows over here. And then I'm also seeing in the FX, I'm seeing risk off today. So I'm seeing definitely some mixed signals over there in the market. I have my bias, and my bias is that the global economy is going to continue to be under pressure. So peso is so tightly correlated to the U.S. indices right now in this time. Today with the yesterday was a down day on the all right. All this was the U.S. markets crashing, right? Since they've come back, pesos come back. Yesterday was a down day in the markets. U.S. dollar was breaking out versus the peso. It's hard to say right now, right? Yeah, at this point, as the U.S. equities come up into some pretty strong resistance, let's see what we have over here, because we've hit the 50% retracement right now. What are the next upside targets? We have over here, he has 29.34. I have 28.78. In this range over here, what would that mean on the peso? We're going to come back in and test towards 22.80. Entirely possible. I don't think that we get lower than that. I think the markets are due for a pullback at this point and or retest of the lows. Whether or not the peso is going to take out 26 or not, that might be dependent on what happens. But again, we were just talking about, where we're looking at the dollar being over the next 6, 12, and 18 months, which is stronger. And the Mexico has one of the largest amount of debts denominated in dollars. I think there's much further pain ahead over here for Mexico. And right now in the near term, though, I don't see it in play. We could put this area over here, the closest support we have over here, right? That's our support. And then below it, we'll add another line of support. As far as when that resumption up, I mean, we even have a trend line over here. Right. I remain definitely very, very bearish on the peso. And right now, this pullback, which is not even much of a pullback, if we add a fib level, let's check that out. I rarely look at fibs, but just for fun. We have the low of the move down over here to the high. All right. So you see that we haven't even pulled back yet into the 0.38 fib, which would be that support. So, this is pretty interesting. That this is why I just use support and resistance. You don't need the fib, but just for perspective, this pullback so far from the highs has hardly been anything, right? And not only that, you have two things. Look at my supports. I have my support lines come in at the fib lines. This is why I don't use fibs or anything else, is because the more indicators you have, the more conflicting signals, the simpler you keep it, the easier it is. No need for me to have these fib-ins when I have my support levels, and they come in at the exact same levels, whether it's the 0.38 fib or the 0.50 fib. I have my two lines of support in there, but I just wanted to give you perspective about how short that pullback has been. And I remain quite bullish on the US dollar versus the Mexican peso. So, I mean, that's great, Thomas. And the only reason I say it's great is because the only way for all of us to keep improving and keep learning is to look at, you know, when we make a mistake. This is the best way to keep improving and to keep, you know, becoming better. But we were looking at 1, 2, 3, 4, 5, 6, 7, or 6 up days before you took it in a row, which is very rare. We saw during the crisis these amount of down days, but you know, if you pull up the true trend over here, and you see how long we were sold, overbought, and against the downtrend, right? And the only reason I'm just really affirming that is because truly in this case, you know, you bought something that was oversold for an extended time, right? And yes, oversold can remain oversold for an extended time, but generally it doesn't. Generally it doesn't. Swiss is so strong today, and that's what's a little weird, is that we're seeing risk off, and at the same time we're seeing the U.S. equities just completely putting up a really tremendous day over here, a really tremendous day, you know. And not only that, they've rallied now 50% off the lows. You know, they're coming into resistance. They're coming into resistance. I think by now, a lot of people have been, you know, this whole way up, short in the markets, and they're probably shell shocked. And, you know, as you come into this area of resistance, this could be where the market turns, you know, especially now that traders have been kind of wounded. Gold up 2%, almost 2% on the day. Looking beautiful. Bitcoin only up 1% on the day. We are about to enter, you know, sometime within the next 4 months, we will enter the bull market phase of Bitcoin. And at that point, we're going to start seeing some big moves on crypto. It's coming. I've been saying it since we've been together, these past 6 months. Now we're getting closer. Each day we're getting closer and closer. Yep. Hold on, I'll give you a link right now. So full disclosure, this is I use FX Choice as my broker to trade, whether it's you know, oil, gold, or Bitcoin. Not only that, I do trade a base account in Bitcoin. You could use US dollar or pound or euro, whatever, like most FX brokers. Now that is an affiliate link. Now they don't charge you anything extra to use it. It does help support the channel. But I highly recommend FX Choice. I've been with them for a significant amount of time. They by far offer the best customer service. Now, there are other brokers that do offer better spreads. For example, I believe IC markets offers more competitive spreads, and that if you're a short time frame, if you're if you scalp, that makes a big difference, and especially if you're taking a significant amount of trades a day, that makes all the difference in the world. And if you're able to use a broker like IC markets, depending on where you're in the world, I would recommend that if that was your strategy over something like FX Choice. Now, I use FX Choice because of where I'm situated in the world. I do really like the ability to deposit and withdraw in Bitcoin, as well as, most importantly, trade the account in Bitcoin. But you can trade both WTI crude, gold, silver, S&P, and all the FX crosses with that broker. Yeah, and Trader's Way is a good one, especially if you want an account denominated in dollars. Then Trader's Way would be also a good option. Yeah, and let's get a look at that. Let's get a look at just the green in the markets today on the US equities. So this is something that is interesting. This headline over here, this is probably why the equities are up today. G7 saying that they support some type of debt relief. Now, I don't know the details over here, and I've been talking a lot. I've been hearing a lot about debt relief and debt jubilee and all of this nonsense. And why I say it's nonsense is because, man, I'm a firm believer. Not a firm believer. Like, I believe in free markets. I believe in capitalism. And the reason that we're in all of these problems, the reason that we have this great inequality, the reason that we have all of this poverty is because we do not have free markets in the first place. And all this is doing is further extorting the free markets. What about the person who spent the last 7 years working an extra job, eating ramen noodles to pay off his college debt, versus the person that went out, ran up all sorts of debt on his credit cards, and his college loans are going to be forgiven? It doesn't make any sense. And all it does is further distort things down the road. And all it does is create further inequality down the road. So why I feel, why this current situation is going to bring out, much greater poverty in the world. I think 500 million people, because of the current crisis, could end up moving into poverty, which is terrible. I believe that this type of this type of non-free market behavior is what causes all of this in the first place. If you scalp, go with the broker using the lowest spreads possible. You could Google or just look at MyFX book broker spreads, and they'll give you you could see the spread for each currency pair, specifically the whatever pair you're scalping, and definitely find the lowest cost available. That's going to make a big difference overall. Like Jesse, you were saying US dollar Swiss franc is really in jeopardy of breaking down over today. I think so too. I think we're gonna take out those lows. And my question is what that does to at that point. Well, that's going to help strengthen the dollar. First of all, a lower oil price will help strengthen the dollar. There's just less dollars available. That could put more pressure on the Canadian dollar. I wish we had a price of Canadian crude. Well, so I mean, it's a really good question, right? So first of all, let's just really take a look at it. First of all, so right now, um, right now we're looking at best case scenario would be sometime in 2021 the world economy is able to turn around and start seeing some growth. Those are probably pretty optimistic expectations in the fact that what mostly likely is going to happen is I mean I don't even have any idea of when the world economy will start opening up and when countries will be able to get off of lockdown. China is definitely an exception in the fact that they went through some really severe measures in order to lock down their state, right? Now, or I should say country, but I don't think that could happen out in the West. I think that we're looking at seeing in September, by the end of August, September, a second wave hit, which probably would peak around December. More and more, this is going to have lasting damages overall. So all of that is just going to really equate to right now, there's a huge oversupply of oil, about 18 million barrels a day. And that's going to take a long time to actually work off of. Worse is that right now, because of the lower demand for oil and the lower price of oil, countries need to sell more oil. The only way they can bring in more dollars is by pumping and selling more. Look, I would not be surprised if we broke down these lows over here, 1950, and then we'll see what happens at 1450. Whether or not that holds. Is it a good idea holding oil for 5 years? Well, the next the next year for oil looks pretty bad. It's more of, if we do rise up to 35 or 40, probably to sell oil, right, rather than look to buy oil, because you have every single headwind going against you. As far as oil, we're probably going to see much lower oil prices. Now, Bitcoin, on the other hand, is just 30 days away from its 4-year halving event, where the supply of Bitcoin is cut in half. That's the amount of Bitcoin sold on the market every day. The amount of Bitcoin earned by miners every day is cut in half, making it a much more scarce asset. Bitcoin tends to have these booms and bust periods. It's about to enter the boom period, right? So buying Bitcoin and holding it for the next 18 months, I do not think there's another investment in the world that will outperform that. Not even close, right? So that you have all the fundamentals going for you, especially now, even without the expansion of the world monetary supply, the stimulus, being put forth across the world. Bitcoin was entering this bullish phase. you know, just sprinkle that on top and you're setting up some fireworks. So Bitcoin has all the fundamentals to be taking that trade, and crude oil has all of them against it, right? So maybe if you want to, 12 months from now or 18 months from now, revisit that and say, you know what, is this the time to get into oil? That trade has more of a chance of going in your favor quicker. Whereas right now, if you were to take this trade, it might be a couple of maybe not. Maybe we trade up to 35, sometime in the next few months, and then you made an enormous gain. That's possible. Or, we could trade down to 1450 and it could be, 6 months or a year before we even get back up, towards 28 again. It just doesn't seem like a very solid trade because you have the fundamentals going against you. Let's check out the Euro US dollar right now. So a couple of things, I'll pull back on this. When I say pull back, I'll look at a higher time frame with you and we'll figure it out from there. So where I'm waiting to act on the Euro US dollar is a break below this trend line and or this support line. At that point, I would say, okay, the bears have now have control, and we should see at least a test down here, right? That opens up the trade for me. Now, what about entering it right here? Well, if I expect it's going to go down to here, why not enter it here? Well, I don't know that it's not going to go up to here, right? Before it comes down below this support. So you wait for your trigger. Now, what happens if, as we get into this upper trend line over here, this resistance and this horizontal resistance over here at 0.109917, that looks like an area that I want to see if price is rejected and starts making lower lows. Well, that's an area that I'm comfortable getting short. Why am I comfortable? Because my risk reward going into this support, and this support right now, this trend line is almost 2-to-1. It's greater than 1-to-1. So that's a interesting place to take the trade and looks good. Is it possible we break out of this trend line to the upside, this upper resistance of this channel right here, this rising wedge and this resistance? Yeah, that's possible. And if that does happen, right, 60 pips up to the next resistance and or, another 120 pips up to the stronger resistance. And that could happen as well, right? So what I'm getting at is as we come into this resistance, if you see price make lower lows than the previous price bar, depending on the time frame you're trading, that's the first earliest opportunity to get into the trade, and that's a good trade because you're in a downtrend. You're in a downtrend. This is a bearish pattern, and the expectation is that this will get rejected here, and that's a possible entry. 100%. It's a good trade. If you want to wait for some further confirmation to get into a safer entry, that's a break of the lower support of the trend line and or this over here. But right now where price is not, there's no signal to take an entry. You don't short it hoping that it comes down and breaks this trend line. You wait for the confirmation of the break of the trend line, or even further, not only the break of the trend line, but the retest of that broken trend line support. Make sure it holds as resistance. And then as price resumes down, you get a hold. So I mean, I do mean buying and storing Bitcoin offline and off location, right? But yeah, do I, instead of buying Bitcoin in FX, what I do is I use FX choice and I have my account based in Bitcoin. I am looking for significant appreciation in Bitcoin over the next 18 months. And I trade FX through the cross pairs, right? That's where I make my gains with the account based in Bitcoin rather than holding, for example, $20,000 in a US dollar account and growing that account, holding that same amount of value in Bitcoin, which has come off, significantly over the past, since the crisis, over the past 4 weeks. We were trading at 10,400, now trading down at 7,000. That's a 30% loss, but at the same time, I'm looking for Bitcoin well over $110,000 in the next 18 months. And, that would mean, instead of a $20,000 account, $200,000 account. So that's the way I do it. So both, you want to hold that physical Bitcoin, store that offline. At the same time, the way I approach it is having my FX account based in Bitcoin. Hey, no, appreciate you, Henry. Thanks for that, and thanks for everyone for first of all just being here. Working this out with me, because that's what this is. As traders, as investors, we're taking in a ton of information that's completely changing and fluid and flowing all the time, and then we're assessing it in order to make our decisions. So I appreciate you all being here, doing that with me. That means a lot. Am I bullish on Bitcoin? Uh, I'm extraordinarily bullish on Bitcoin. I've never been more bullish on Bitcoin. Of course, thanks, Chefu. Appreciate it. Amar, there's if you go into the channel, if you look at the videos, if you look at a playlist on Bitcoin, there's some very well put together videos explaining exactly why I am so bullish on Bitcoin. And they're really good resources. They're really good resources for anyone to really understand the 4-year cycle of Bitcoin. And believe me, more or less, 21 months from now, I will be really bearish on Bitcoin. I will probably be more bearish than anyone on Bitcoin, but not right now. Right now, I am one of the most bullish on Bitcoin that you will ever know. But that will change at the right time, and there will come a time when you guys all know me, when I am completely bearish on Bitcoin. And first, that will be a phase. First, that it will be actually scaling out of Bitcoin back into dollars, and or what most likely probably not dollars. Actually, probably at that point it will be into gold, just to keep that store. Even though not that I necessarily expect that gold will keep appreciating in value, but it will hold the value better than Bitcoin will at that point. And then I will become very bearish on Bitcoin, and I will be betting against, speculating against Bitcoin, because I'm here not because I love Bitcoin, which I love Bitcoin, and I love Bitcoin most of all because it's a chance for equality and freedom, because it's going to provide a better future for my kids and for the world. But as a trader and an investor, when the cycle warrants to be bearish Bitcoin, I'm completely bearish and betting against Bitcoin. No, you don't need to store Bitcoin with leverage. A lot of traders get wrecked on Bitcoin using leverage because they over leverage, And the fact of the matter is when you're talking the type of, a 10x return, you don't need leverage, right? Bitcoin is an extraordinarily volatile asset full of price discovery. You could buy a fraction of a Bitcoin. You could buy $10 worth. You could buy $1 worth of Bitcoin, and you don't need to buy a whole Bitcoin. You could buy $50, $100, $500, $1,000 worth of Bitcoin. So this is a really good question, Omar. This is really thinking as we should be thinking. You're asking if I think that the halving miners are going to want to dump their Bitcoin. So there are, let's just keep it simple. There are two forms of miners. We'll call them strong miners and weak miners. Okay. Strong miners will define as those miners that have the lowest cost of electricity and the best equipment. All right. Those are strong miners, and their cost of producing Bitcoin is much lower. Let's just say, for the sake of this argument, that their cost of Bitcoin, which is $3,500. That's just a figure, right? I'm not saying that's what it is. Let's say it's $3,500. That's the strong miners' cost of producing a Bitcoin. And let's say that there are the weak miners, and these weak miners are producing Bitcoin, let's say right here at market. Let's say it's $7,500. That's where they're break even on Bitcoin. All right. Now, as soon as the halving happens, right? So at this point, each miner is producing half the amount of Bitcoin. What does that mean? That means that these miners right here, they're going to be hurting. They're going to be hurting, and every single Bitcoin they're mined, they need to sell at market right away. Not only that, in order to pay their electricity costs, their energy costs, to pay their rent, to pay their salaries, to pay their investors, any Bitcoin they had in reserve, they're going to need to be selling to meet costs. So these miners over a period of 1 or 2 months are going to capitulate, right? And they're going to be selling in the meantime a lot of Bitcoin, right? Now, these miners over here, right, they're not under the same constraints, right? Because they have a lower cost of producing Bitcoin. So they're not going to be under the same pressure that these miners are under after the halving. Not only that, these miners are the smart money, and they also know that the price of Bitcoin is going to appreciate. So they're only going to be selling what Bitcoin they need to meet their cost that they need. And then the rest they're going to be holding, and they're going to be holding for much higher prices. So after 2 months, more or less 1 to 3 months, when these miners capitulate, there's going to be less and less Bitcoin being sold on the market from their reserves and from each Bitcoin they're producing. All of a sudden, these guys are gone. These miners are left, and these miners are strong. There's going to be less and less Bitcoin being sold. They're waiting for those higher prices, and that's when Bitcoin begins its bull phase. So after the halving, you have the possibility of pressure on Bitcoin continuing for the next 1 to 3 months. However, at the same time, we are coming into the halving at a lower price than we would be if we didn't have the crisis, right? So we would probably, this is where we should have been, right? I think 11,400 is where I have it for my math. And so we're coming in already lower. During the possibility during the latest halving, we came in a little bit higher than we should, and you saw Bitcoin come off 30% before boom. So that's the story. That's the story. If I'm bearish on the dollar, which I'm not, I'm bullish on the dollar. The latest video on the channel published yesterday takes a look at that. Now, but assuming that I was bearish on the dollar, would it be safe to hold real assets? For example, real estate, art, and other tangible goods, land. If stocks crash, And in 21 months, Bitcoin is possibly going down. Well, I mean, so I believe that thanks, Omar. I believe we're going to see. I mean, I think it is very cheap right now. And if you weren't able to pick up some more Bitcoin during the crash a couple of weeks ago, are we going to revisit those lows? I don't know. I mean, a lot of people are hoping that we do, but we did. We were already there. We're going to get into that question about what assets to hold in 1 second. We're going to look at the 15-minute time frame right now here. Dollar continues to be under pressure today. And the reason we're going to look at the 15-minute time frame is because we're going to see while we looked at that pattern that Dinkar had put in. This head and shoulders over here, which is still in play. This is the reason you wait for confirmation, because until the neckline breaks, you don't want to be short. This is bullish. You want to be long. All right. 8 hour still coming back up into that resistance. Now I'm waiting here as we're coming into resistance for a short. That short will only react if this local support, this neckline of this head and shoulder is taken down to the downside. On the upside, we need to get above this resistance over here. If we get above the resistance and then come back and test it as support and it holds, then there's a nice bit of room in here for a long side trade for me. Now, I want to get back into that question about what type of, so we're seeing a lot of pressure in the real estate market. We are seeing, first of all, a lot of people really having trouble at this point being able to meet their mortgages. They're asking for some type of help and relief. We're just 1 month into the crisis, 1 month into the recession, 1 month into the depression. And you're also seeing a lot of renters, 30% of renters not being able to go ahead and pay their rent, which means that landlords then are not able in the future to pay their mortgages. You're seeing a lot of like super hosts on Airbnb, people that own 8 to 12 properties not being able to go ahead and rent out those properties, and therefore not being able to go ahead and meet their mortgage payments. A lot of people are over leveraged into real estate, and right now that's starting to squeeze them. On top of this, you have a lot of baby boomers who are living in 4 and 5 bedroom homes inside suburbia America. And they're at a point in their life now where their kids have moved out and they're getting close to retirement, and they need to downsize their house, move into something that's easier to maintain. There's no yard to take care of. They don't need all those extra bedrooms. They could actually be more comfortable in a 2-bedroom place and not have to actually do any maintenance to the house, which means they're trying to sell those properties. But the millennial generation is not able to go ahead and actually purchase those homes. So you're going to see an oversupply on the market. You're going to see much more supply, many more houses for sale than is able to be absorbed by the market. This is going to push down prices on real estate, and it's going to come under significant pressure over the next couple of years. So I don't think that real estate is a good investment. Why land and farmland is probably, long term phenomenal investment. I think that I don't think stocks are going to crash. First of all, I think stocks are actually, whether there's a strong dollar or a weak dollar, are going to wind up, in the greater scheme of things, really do extremely well. That's a great play against the dollar. A weak dollar is actually being long stocks, and that's also a really good play versus a strong dollar, because then you need all foreigners to come into the market. And the way that they keep redoing the indexes, meaning that, you're able to, a company that's performing poor, you remove it from the index, and then you put in a new company. The next Tesla comes along, they're added to the index. That kind of helps keep a bit under the indexes as well. So I actually do believe that equities are a good long play. I 21 months from now is a long time, 2 years from now. So, you do want to take advantage of gold and Bitcoin as the current fundamentals warrant that, which is, the monetary supply of the world being expanded at just crazy, unsustainable pace. And, you could position yourself out of those accordingly when it's the right time. You know, even right now, rental properties, people are having trouble making rent, right? So that's a tough one right now. I don't think real estate is the best investment right now. If you look at Japan, going back to the early 90s or go back to the late 80s when their real estate market was just pumping, and their stock market was pumping, that was actually, they've never regained those highs. Their real estate market is off by 50%. We're kind of shadowing them in that we're now beginning to monetize our debt like them. Our demographics are still positive in the US, where they're negative in Japan, but the millennials just don't have the same, backwinds that the boomers had. And it's really tough for them. So I think it's better to kind of like the same thing when we looked at oil, and we were saying, well, now's not the time to buy oil and hold it just till it comes back, but maybe we could revisit that in 12 or 18 months from now. I think that similarly, we can say for the next 18 months that Bitcoin is the investment. Gold right now is the investment. And down the line, as things change, that's what we're always doing. We're always kind of trying to figure out the puzzle, and we'll be able to position into, what at the time seems to be the best investment, rather than, be positioned in that now, be forward looking and thinking. But, now, right now, the best investment, in my opinion, is Bitcoin, gold, equities. I do believe so, but I'm not yet done with them. We're into this heavy resistance right now. This is where I'm looking for a turn in them. Again, I do believe we could revisit the lows and take them out. And not only that, that's when the Fed will come in and start buying stocks. At that point, then I would say, okay, of course, be long equities, right? Right now, no, there's no way, that's not the trade. So the stream goes to, a different amount of times. We've been online for 2 hours right now. We generally go on average 2 hours up to 3 hours. We start at 9:00 a.m. Eastern time daily. Glad to have you here and everyone who's joined us. I do think this is a good time, though, to call it a day right now. Good session. Definitely appreciate all of you, and especially 18 thumbs up. Definitely appreciate that, because that does, again, help the channel. It's showing, first of all, it shows me We appreciate what we're doing here, the time put in, as well as it helps others, especially the algorithm, know that people like what's going on in over here. Test, test. Is the mic off right now, everyone? Or could you hear me? Okay, good. As I was saying, do appreciate all that love. Thank you for helping support me and the channel. And you know, so listen, the market's ever fluid. Yesterday was a day when we were just explosive, looking at setups developing, setups triggering, and you got to stick with the flow of the market. And every day is different. Every day is not the same. Now, there's always opportunity, but you're going to find the more patient you are, the more patient you are. And when you see something, instead of just acting right away, start really watching it and waiting. Think about a lion in the savannah. When it has its prey, it just doesn't just start attacking it. It waits for that perfect opportunity to go ahead and pounce. That's what you need to do as a trader, right? That's what trading is about. So much enjoy. I love the markets. I love learning about them. I love every day taking in all the ever-changing information and just kind of head and putting it together, figuring out the puzzle before us so that we go ahead and act in it and together. So thanks, everyone. Have a beautiful day, and I'll talk to you soon. Hey, Brad. Awesome. Jesse, thanks for the tacos, brother. Love them. We come at 9 o'clock a.m. every day, Eastern time, right? If you look in the description, you'll see, we stream live every day, Monday through Friday, 9 a.m. Eastern time. You go ahead and not only subscribe to the channel if you're not already, but hit that bell and be notified when we come online. Or even better, go ahead and, hit yourself into that trading view group. I'm sorry, the free Telegram group. If you go ahead and you click on that free Telegram group, you're going to be alerted when we go ahead. That's the Telegram group. When we go live, I'll let you know. I wish I could remove that. Can't remove my own cheats. Thanks, Anita. You too. Bears eat, bulls eat, pigs get slaughtered. And there it is. All right, everyone. God love you. Talk to you later.